Hi everyone. We have today another episode of Digital Health Inside Out. Just as a reminder, we created this channel to talk about important topics regarding digital health and everything related. And I think today we definitely have a very important topic. Um, Before I introduce you to our today's guest, as a reminder, please subscribe to our channel. Sergey promised that he's not going to come back to the States from Europe unless we get to 1,000 subscribers by the end of this year. So if you ever want to see him back in the US, please subscribe. All right, the topic of our today's conversation is women's health is a niche. It's undeserved and somewhat underfunded. And I'd like to introduce to our today's experts. Traditionally, Sergey Polevikov, my co-host. We also have Marianne Umar himself, Alice Jen, and last but not least, Julia Manfrini-Peave. Hi, Julia.
Hi, Alex. Great to see you.
You don't have a system that's set up for these companies to succeed.
Did VC bros destroy digital health?
Healthcare is like 20 years behind.
That's so disrespectful.
Any little error could be catastrophic in medicine. Agents is like the story of 2025.
YouTube.health.
Let's start with our short introductions, literally like 30, 40 seconds. Just tell us who you are, what you do, and why you're excited about women's health. Marianne, want to start?
Sure, happy to do so. I'll try and keep it in 30 seconds. As you mentioned, I'm Marianne Umar himself, and you pronounced my name right. So thank you so much for that, Alex. I'm an investment strategist and also the founder of FemHealth Alliance. So that's a new Swiss platform that's bringing together capital, science, and policy to accelerate women's health innovation across Europe. I've spent 2 decades in wealth and asset management. I've often sat on investment committees and asset allocation committees, so I see how these decisions are made. And my focus now is on the intersection of those two worlds, how we bridge the rigor of institutional capital and institutional investing with the reality of healthcare innovation, particularly for women, that has been historically overlooked.
Amazing. And where does this podcast find you?
I'm based in Switzerland, so I'm sitting in the mountains right now. And you can also find me on Substack. I'm the editor of FemHealth Ventures, where we talk about all things women's health. So you can find me on Substack as well.
Awesome. A little jealous now. I also want to be in Switzerland and mountains, but that's okay. All right, Alice, you want to tell us more about yourself?
Sure. Yeah. Thank you so much for having me. And Marianne, it's so nice to meet you live. I'm on your newsletter and enjoy reading it very much. So thank you for all your work there.
Thank
Um,
you.
so I'm sitting here in San Francisco. It's bright and early, and very excited to talk about my favorite topic. My background is I'm a physician turned management consultant turned VC investor, and I'm currently at a fund called Foreground Capital. We invest exclusively in women's health. That means everything from female exclusive conditions such as endometriosis to things that affect women differently, such as heart health, and things that affect women disproportionately, such as autoimmune health. And we invest across the spectrum of health segments, so life sciences, digital health, health services, etc.
Awesome. Thank you so much. Julia.
Great to see you, Alice. Great to meet you, Marianne. Nice to see you again, Alex and Sergey. My name is Julia Manfrini-Peave. I'm the founder and the managing partner of Pace Healthcare Capital. Pace invests in early stage digital health startups. So very much AI, tech-enabled services, machine learning. We're based here in Chicago, so I'm very jealous of Marianne's location in Switzerland, but it's a beautiful fall day in the Midwest. We back overlooked founders in overlooked geographies, so we really look in places where others aren't, and somehow women's health belongs to that category. We see this as a massive once-in-a-generation opportunity, and we've already had very successful investments in that space. So looking forward to telling you more. And since we're in the middle of the country as a platform, we do a whole lot to promote advocacy, to promote communities of women's entrepreneurs and women's health. We actually hosted women's health advocates in our offices last week. So looking forward to this discussion.
Thank you. That's great. Sergey?
Yes, I'm Sergey Polevikov. I'm Alex's co-host on this podcast. I'm a data scientist and digital health startup founder. We use AI to help patients and physicians with various functions. I also have a Substack, not as famous as Marianne's, but trying to do my best. Health Uncut, where I research AI models in healthcare, trying to find some positive benefits, and also, which happens actually most of the time, some false positives. Sometimes companies oversell on their models, and I'm trying to kind of find those red flags. And I'm also doing fraud investigations in healthcare kind of on my own Substack. So.
Thank you. I'm Alex. I'm a co-founder of a medical device startup, Yad. I'm really passionate about healthcare equity. We want to provide accessible healthcare to everyone on this planet. But today I'm really excited to talk about women's health. I think it's a crucial topic. I'm also a co-founder of Health to Tech, series of digital health events, and we've already done a few events specifically focused on women's health, and I want to do more for sure. But my first question to you guys, our topic states that it's undeserved and underfunded. Is that actually true?
I'm happy to kick off. So before I became an investor, I had other career paths, and the space is also in women's health where I experienced this very deeply. So one is in medical school. While I was there, I didn't fully understand that modern medicine is really developed for a 70-kilogram white male. That is very much the case. In terms of drug discovery, dosing, our understanding of biology for many conditions where large studies were done, but mostly on men, that really is the underpinning of modern medicine. And that's, that's not something that even those of us going through the training really realized. Like, I didn't really understand until a few years ago that all of the images in the anatomy textbook that I had were of white male bodies, except for, ovaries and a uterus. And so that type of bias is very much ingrained in our medical system. And we're just starting to talk about that, which is really important. A few other data points. Women were not systematically included in clinical trials for several decades. And initially, this was out of protection so that when women who were pregnant would not pass on things to their fetus. But actually, all women of reproductive age were excluded from clinical trials from a period from somewhere in the 1960s, somewhere there until 1993, when it became mandated to actually include women. So that's just kind of one example that highlights the gap that we have here. And I'll throw out one other statistic from my kind of second career in consulting. I spent a lot of time looking at data around innovation trends in pharma, in startups, et cetera. And this is with McKinsey. And one of the articles that I wrote on my way out, we had looked at what is the proportion of clinical trial, spend or just by volume in women's health. And at that time, we defined women's health a little bit more narrowly. So we're looking at conditions specific to women. So that's, menopause, menstruation, endometriosis, PCOS. There's still a whole long list. When we looked at the data, about 1% of clinical trial spend is or number of assets in clinical trials is in female-specific health conditions outside of oncology. So that's 1% for fertility and menopause, these broad areas that affect many people, and that just also shows you the gap in the white space. If you include women's oncology, as in breast cancer, ovarian cancer, then that number's up more like 4%, but still, there's still a long way to go.
Absolutely. And I fully agree with everything you've said, Alice. And I want to maybe add to that from my vantage point as an allocator or someone that sat on institutional investment committees and thinking about, where capital should flow. Maybe I'll start by sort of sharing my story as to why I actually got into this space and how. And without going into boring you with the long, with the long details, but I was actually introduced to a women's health company by a friend of mine and a colleague who is a healthcare investor here in Switzerland. And this company had come up with an innovation tackling uterine fibroids in a minimally invasive way. Now, the problem was, and this was a huge disconnect, because at the time when he was looking at the due diligence for this company, talking to doctors, doctors said basically if a woman has got uterine fibroids and it's of a certain size and prognosis, we just take out the uterus. Whereas when you spoke to women were saying, well, I'd rather keep my uterus. And if there was a solution that could solve this problem, I'd be open to it. So there was a gap there, which he realized, and the technology was sound, the science was solid, they had early traction. So from all accounts, it made sense. But the fundraising for that company was just incredibly hard. It was excruciatingly painful. And the problem, I think, if we sort of step back and look at the post-mortem, I mean, this is a success story, because in the end, he was able to get the funding to complete that funding round. But looking at the post-mortem, I think two things really stood out. I think on the one hand, this was a company that was solving a real problem, but in trying to round up several institutional investors to co-invest alongside him, he discovered that there was a problem of pattern recognition. As an institutional investor, you just have no upside, zero, in investing in a category that you haven't invested before. You don't know what you don't know. And so even when the science is solid, even when the data is there, you hesitate because of that pattern recognition. And I think this is something that is really prevalent in women's health. That's actually why I got into this space. And this sort of feeds that, or it confirms your point, Alex, about saying, is women's health considered niche? It is, because on an institutional side, we have this pattern recognition problem that we don't recognize, how to evaluate women's health. And so we need to, so to just build on top of what Alice has said, we do have this problem, which contributes to the perceptions that women's health is niche, when it is not a niche market. There's nothing niche about women's health at all.
Yes, and what Alice and Marianne described is so spot on. When we think about women's health, as Alice described, it's many of the diseases related to women's reproductive system, right? Endometriosis, PCOS, menopause. It's also a large number of diseases that will exhibit differently in women than in men, because as Alice describes rightfully, women are not short men. We have a different physiology, we have a different hormone system, and therefore you hear the case of cardiac arrest or heart diseases that will just have different symptoms in women, and when they actually have heart failure will show up in the ED and be confused for something else, like a heartburn or a stomach problem, and be sent home, while they are having actually issues that should be escalated. And so there is a large portion of women's health that is just regular diseases, but that we don't fully understand, unable to diagnose the right way, unable to treat the right way. And I would say at PACE, we also think about the role of women in the economy. Women as caregivers for their families, women as the backbone of the workforce in healthcare. 67% of the headcount in healthcare are women. And so when we think about women's health, there are actually other areas where we can push the envelope and think about investments effectively that make sense. It's not a niche. I, like Marianne and Alice, I am an investor. My job is to be the best steward of capital we can. Identify entrepreneurs, identify businesses we can back, support their growth, drive and exit, return capital. That's my job. My job is therefore to also be contrarian sometimes and look in areas where others aren't looking. That means there are better opportunities. And when you think about the fact that women make 80% of healthcare decisions in their household, spend 70% of the household expenses, make those decisions, but women's health only get 5% of funding. That tells you there are many, many diamonds in the rough in there that actually worth looking into and investing behind. And that's a risk we took in 2021 when we backed Alloy Health, for instance, in the menopause space. I remember during due diligence, we talked to an insurance company and we were just asking their views on menopause at the time. And it wasn't getting the visibility it does now. And the insurance guy said, well, nobody dies from menopause. And that was the view. And it's like, but every women or every individual assigned female at birth is actually going to go through menopause. And for some of them, the symptoms are debilitating. We know that women are overprescribed antidepressants in their 40s and 50s because it's a hormonal issue. It's not because they're depressed. And so there's a big issue there. We backed Alloy, and it's frankly a highly successful investment now. It's a national voice that's recognized. And I am glad that we are now seeing on the investment side those success stories that allow us to say, look, it's not a niche. We can go and do some more. It gives us license to go and deploy a whole lot more capital behind the space.
Yeah, I just want to point out that that number 80% is kind of interesting. When I was on Marianne's podcast, we talked about it, that, I think we said something like women's health is actually men's health and children's health because of that decision-making ability of women as kind of head of the family for health issues, for example. So, but still, I think most people still see it as like very narrow. Oh, there's women's health, it's some kind of niche area. And I wanted to ask you, because I think a lot of our listeners may kind of, whether, for the right or wrong reasons, they may interpret women's health investing in women's health as DEI kind of issue, like maybe similar to what we had with ESG investing like years ago. Oh, it's like niche area. It's good to have, but like in terms of maybe returns or anything like that, it's not really available. But actually statistics, I think, shows otherwise. So in my view, it's not exactly DEI. It's actually has its merit. But I think most people still consider this kind of niche. Oh, maybe we have to invest just because it's kind of like quote unquote the right thing to do. And so my question is like, maybe you can give your thoughts on that as well. Is it DI? Is it not DI? Or does it have its merit, women's health investing?
If I kind of think about it from an allocator's perspective, I think the perception of niche sometimes isn't about scale. It's about optics, exactly to the point that you're trying to make. So I think in institutional settings, there is particularly the risk that you're seen as impact only. So when a women's health deal sort of lands on the table, someone might inevitably ask, well, is this philanthropy or is this performance? And that framing actually kills momentum before the discussion even starts, because it almost traps the category in a moral frame, rather than a market frame. And I think we need to move away from that, because in my view, I think women's health or investing in women's health is not a DEI. It's not a DEI topic. It's, at the end of the day, we are in the business of delivering returns to our investors, to our clients, to our shareholders. And with women's health, you have an opportunity to deliver financial returns, particularly because in my view, I think the market is mispriced. Women's health is mispriced. And that is because this mispricing occurs because markets misprice what they can't model. As Alice mentioned, most medical, regulatory, economic data has historically been built around male baselines. And so if we sort of think about it, the models for women's health literally don't exist in standard form. So, as an institutional, if you see something that you can't benchmark, say a new menopause therapy, a maternal health platform, because you can't benchmark it, you assume it's risky, but that's not risk. That's information asymmetry, which actually gives you the opportunity for outsized return potential. So or for alpha in my view.
Absolutely. And Marianne is exactly nailing it on the head. If anyone in the audience wants to read an amazing book about bias in data, I highly recommend this book called Invisible Women that was written by Caroline Criado Perez. And it describes the several layers of bias in data collection and studies around women's health and a host of other aspects. But it sort of really shows, as Marianne describes, it's just there are a host of things we don't know. And when we don't know, we really don't know. And so when we think about women's health, there's also just an opportunity, especially with AI these days and machine learning, to build stronger data sets, to build stronger models, to understand diseases better, and then develop solutions. That's a key turning point in where we are today that would not have been possible in the 80s or 90s, for instance. There is a second aspect, and that's a very important one. There's a massive societal change. Women have more disposable income and savings than ever before. And now women are not afraid of speaking with their daughters. They will not have patience for suffering in silence in the way previous generation may have just accepted it. We now have the means to actually change it. So give us the solutions that actually solve our issues. There's a strong willingness to pay, and that tells you there's now a market that actually wants to be served and great businesses that can be built. So for us investors, it's a great market opportunity that, again, would not have existed a decade or two prior.
Yep. Yeah. And just to pile on, I agree with everything said, especially the book recommendation. I think it's an incredible one. So we are a, market rate seeking, venture capital funds with LPs that expect returns. So no, we're not investing in DEI or social good. We care about impact, and that's part of the thesis, but that is not where it ends. And I do think, with women's health, we know that it has great potential for impact for women themselves, for children. We just talked about how, the heads of households for healthcare decisions. We know it's great for economies and health systems. But that's not the only reasons we want to invest, because there is a very clear business case, or else all of us wouldn't be here, right? You would be talking to folks in philanthropy for this podcast and not in the private sector. So there's absolutely a business case here. And what is exciting is that it is underserved. So there's a lot of white space where you have large populations with significant unmet clinical needs who have not seen new innovations in a very long time. That makes it very ripe for disruption. And what's also exciting is that we've seen more scientific innovations in the past 5 years than ever before, where we're understanding female biology more and sex-specific differences in different conditions, which leads itself to different innovations. So, I personally, I struggle with the framing, because on one hand, we know it's good for a lot of folks and that's why we care. But on the other hand, that's not the only reason to care. And so, how do we flip the script and talk more about the business opportunity? And I would say one tactical thing I do advise founders on is, to lead with, their credibility, why they're the best founder to address this issue, and also what the market need and opportunity is. Many times, founders and investors, we have personal experiences in women's health, which makes us, kind of personally passionate about it. And if we lead with that, then that's where the conversation kind of, sometimes end. But we actually want to make sure we talk about the business case and why this makes sense for returns, and marry that with the personal passion, the societal good, and on all of that.
That's I advise some startup founders. So I'm an investor as well, and I always say, when you get into that room, because my job is to make sure that you're not getting into that room and talking about female biology for the first 30 minutes. That's my role. So I want you to get into that room, and I want you to demonstrate that you are a badass operator and you're going to deliver the metrics. That's it. Lead on that. Don't lead on the personal story. Don't lead. That's so fully agree with you, Alice.
So we know that there are still less women-led startups in women's health and overall, and there are less female investors as well. So my question is, how much of investor skepticism in startups related to women's health is in misunderstanding It's either biology or reimbursement or regulatory, or is still more of implicit gender bias? What do you think?
I think it's both. I think it's both. Um, there is a lot of data now around gender bias on fundraising. And I think Harvard studied it a little while ago and showed data that when women entrepreneurs and men entrepreneurs are being asked questions about their pitch, the questions towards male entrepreneurs tend to lean towards the concept of promotion. And the questions for women entrepreneurs tend to lead towards prevention. So it's a different approach to risk, it's a different approach to upside, and therefore it leads to different outcome when it comes to investment decisions. So the bias is there. However, our jobs as investors, regardless of our gender, and here you have three amazing women leading their own firms, allocating capital, building businesses. But regardless of that, our job is to make sense of the data, the signals we see, and get beyond the noise. And so we have to figure out those businesses that actually have the right metric, that have the momentum, and back those entrepreneurs that have vision. And that's where our job really is. So you do see still quite a bit of both, but you see an increase also in the number of dollars towards women-led funds. That allows to actually, there's data around that to somewhat balance bias. And again, I go back to the previous question. We're not here to talk about DEI or concessionary returns. We're here to talk about how we actually build very successful investment cases in that space. So how do we get there is really the key question.
I'm of two minds here. On one hand, there is a gender gap across the spectrum from invention to entrepreneurship, to investments, et cetera, and beyond. That is true, that is there, and that is the reason why we want to have more representation at all of those stages. On the other hand, it's not just women who can innovate in or invest in women's health, and it shouldn't be. Just like how you don't need to be a cancer patient to invest in oncology or have diabetes to invest in an endocrine startup. Same thing. Women's health is a massive market opportunity. So men and women should be interested for that reason. And so I'm of two minds in thinking about this question. So there's the reality of it, but then also I welcome the men in the space who are innovating, investing. We need everybody involved because it is a market opportunity.
And I don't have much to add because I think Julia and Alice have covered it really well. I think that there is a gender gap, but I think it's not just about who's biased. I think it's a structural problem that we're dealing with. Again, back to the point about the data, the clinical trials and decision makers have been male dominant for decades. The entire system basically learns to treat women's health as peripheral. And I think to give you a concrete example, one of the founders that I worked with is innovating in endometriosis diagnostics. And, she has, several years of research, clinical data, running clinical trials at the moment, all of the metrics or all of the milestones that you would expect to see. She's talking to a VC who asks her, really, how big is this problem? How big is this market? And so I kind of feel like because of the, historical backpack that we come with, that we're seeing that come through today, even, still, even with, founders getting questions like this. And so what tends to happen is you almost kind of see founders in women's health almost having to end up over validating and still being told, we don't see the exits. In my mind, I call that sort of proof inflation. You're asking founders to overprove because investors are underinformed. And this kind of feeds also still back into that sort of pattern recognition problem that I talked about earlier. So, yeah, I think that's what I wanted to add, that there is the remnants of gender bias still playing a role here. But as Alice said, I think, and as Julia said as well, we need to move past that and really talk about how do we ensure that others or other investors really can see the business case here of investing in women's health, not as a sort of a moral or social imperative, but really as a business from an economic perspective.
I would agree with you, Marianne. It's part of this is gender bias, but I was also wondering if maybe you can, all of you can maybe expand on the following. As you mentioned, Marianne, it's kind of like been men's territory in many ways. And I was been questioning in my research and just in general looking at statistics, many of the top venture capital funds have been underperforming. I would say the numbers I looked at maybe last couple of decades, yet nothing really changes. They get more investments from the underlying investors like pension funds. And I've been always puzzled by that. And I'm thinking maybe kind of women's investing is part of that story. If you're running a pension fund as a manager, and most of them, let's face it, most of them have been historically men at top positions, you're investing maybe in some of your buddies who run VC funds, and then VC funds invest in startups, also historically male dominated. So I'm kind of simplifying here, but I'm just thinking maybe that's also part of the story. So to me, I've been always puzzled how to break this kind of vicious cycle where you do have your fiduciary duty as a pension fund manager, because to me that's kind of like where it starts. That's where the money's coming in. Yet you continue. I've talked to some of them. They're like, well, I'm not going to be fired by investing in Sequoia, right, or General Catalyst. And so we have this continued vicious cycle despite the underperformance. And I think like maybe women's investing is also part of the story that men invest in men's startups, but maybe I'm wrong here.
No, I completely agree with you. And I think that's what I was alluding to when I was talking about, the whole pattern recognition. And from the allocator side, I can sort of understand why this persists. If you are sitting in a room where a deal is being considered, one of the questions that comes up in such rooms is, who else is in this deal? Who else is investing into this? And that one question, really, it can change the energy in the room. And I think on the one hand, I can sort of understand, in an investment committee, you have carriers to protect. The unspoken rule is simple. It's safer to be wrong with the crowd than right alone. Going off piste carries carrier risk. It carries downside. So even when the data is credible, the comfort isn't there. And I think until we sort of see that shifts. And I think the good thing is we're having this conversation. We're in the early innings of women's health going mainstream. I mean, 5 years ago, we weren't having these sorts of conversations, or even 10 years ago. So it's moving, at least in the right direction. But until we sort of see that shift really come through, until allocators can back new categories without fear of sort of reputational downside, I think women's health will keep facing a higher bar, not for scientific reasons, but I think for structural ones. And that's why it's so important that we're having these conversations.
Yeah, let me add on to what Marianne is rightfully describing. So before starting PACE 5 years ago, I actually used to work for one of the largest allocators on the planet, called CDPQ, Caisse de dépôt and placement Québec, 400 billions of assets under management. My job was to invest directly into healthcare companies in North America, LATAM, in PE and VC, but my colleagues were investing in funds, dozens and dozens of funds. The Caisse actually had a host of data from the public equity side showing that diverse investment teams were performing better. I repeat, diverse investment teams were performing better. And I go back to something I often say. If you are told that companies with an orange logo perform better, where are you going to invest? Okay, it's the same thing. If you have a piece of data that tells you you can systematically generate alpha, you are following your fiduciary duties by actually piling onto it. And that's the same concept. On the private market side, whether it's private equity or venture, it's been very hard to prove, mostly because deals, track record, deal attribution is very hard to follow over long periods of time. The people who did the deal years and years prior may evolve, may switch firms, etc. So today we struggle to actually put that data forward. There is some from Stepstone, there is some from here and there, but it hasn't been a sort of bang on proof that if you have diverse investment teams, your financial performance will be better on the VC or the PE side. There is a belief, however, from investors and LPs that started trickling down. It is more and more on the due diligence checklist. Give us your stats, your demographics, tell us who you are, because LPs are chasing returns as they should. So there is an evolution and there is a movement in that direction, which is fueled by fiduciary duties. However, in the VC world, and Sergey, you're absolutely right, returns have been all over the place. On a 20-year arch, the top quartile funds outperform massively the rest, which means there's a tendency to pile on the brand names, right? And go back to your point, nobody gets fired for investing in Sequoia. There's also proof that over time, those firms tend to perform fairly well. But you know who performs better? Emerging managers, fund 1, 2, and 3. And this is actually where you find the most returns. And this is where you find a whole lot of actually diversity among VC-owned firms. And there, it's more tedious. Smaller firms, right? If you're trying to deploy, call it $200 million in private equity and venture, going after $50 million funds where you can only invest $1 or $2 million a pop is inefficient. And so what's hard here is just an issue of intermediation in the financial markets. How do we make sure that those dollars that actually know how to outperform and look for those managers make their way where the managers are? And this is more of an issue of layers of intermediaries in capital markets.
Yeah. And the only thing I'll add to that is just from a structural perspective, there are funds like ours that are focused exclusively in women's health. There's I would say, a half dozen or so. And then there are other funds that are focused on care economy, which includes women's health, but also elder care, childcare, and then funds that are focused on all things women. So how women play, women's wealth, women's health, all of these categories, we are all actually emerging funds. We're all, sub 100 million emerging managers, and pension funds don't invest in emerging managers for multiple reasons. They are, they write big checks, much bigger than what our funds can absorb. Also, they tend to invest in established managers who have on fund, 8, been around for, 20 years. So just structurally, there's less of a fit there. They're investing more in the big established funds. Well, the good news is within that group, we co-invest with a number of large multi-stage players, and more of them are interested in women's health. They're not going to have a whole fund dedicated to the thesis, but within their healthcare teams, whether it's on the digital side or the life science side, they are looking at women's health. And I can't tell you how many large funds have reached out in the past couple of years saying, we haven't invested yet, but we're thinking about it. We're landscaping, we're looking at this or that. And many of these funds are also investing later stage. So, we're at the seed to Series A stage. These funds are investing maybe B and C. And there historically haven't been as many women's health companies reach that stage quite yet because it is an earlier pipeline. But now we're getting to that point, and we are seeing some big rounds happen, later rounds with these, big funds and startups that are really growing into that space. So that's really exciting. And just as an example of this type of interest, there is a summit at the New York Stock Exchange every year called the Health of Women Summit. And the first year, 3 years ago, brought together, I think, maybe 100 investors representing, I think maybe $1 billion in capital. And then the next year, there were 200. And then the year after that, there were even more. And this is, a really important forum to bring together kind of multi-stage investors, not just the early stage seed ones that are, we're all emerging managers, but really capital across the spectrum.
I wanted to shift gears a little bit and talk about success stories in the space. And Julia, you already mentioned one of your portfolio companies. Can you share more examples of really successful success stories in women's health that are out there?
Yeah, so I think Success stories here are really important and how they did it. So I quoted our investment in Alloy Health in the menopause space that now became a national voice on the topic. They went direct to consumer. So they directly spoke to women about what women wanted to not feel miserable in perimenopause and menopause, and what did they need in terms of advice, in terms of support, in terms of products. But it's not just talking to women. As I said, a fundamental societal change is that women have more disposable income, have more savings, and want to take ownership of their own health. But it's beyond that. You can look at Maven, for instance, that centered the story around employers and productivity. What happens to your bottom line when women miss work because they have a host of things to take care of? And that's an argument that employers hear very well. So there are a host of economical advantages out there at actually making sure we invest in women's health. And I think telling that story is what made Maven very successful.
Yeah, I'm happy to share one from our portfolio as well. We have a company called Evie, which is in the vaginal microbiome space. And what's incredible about what they built is there is novel science. They have a vaginal microbiome test that can test for 700 different microbes that affect your health, not just in that region, but across and all over your body for pregnancy outcomes, menopause, and a host of conditions. And this is an area that in the scientific community, there is understanding and agreement that this is an important area to understand. But to date, there has not been as much research. The largest biobank is, maybe like a few hundred samples. Well, Evie has actually, they went D2C, so customers can actually order the test themselves, in the comfort of their home, take the tests and mail it back in for results. So there's multiple things happening here. It's new science. It's breaking barriers for women to receive care where they're not. Vaginal symptoms are the number one reason women go to the gynecologist, and we don't have great tests, great solutions. So it solves that. But also, they've built the world's largest biobank now through the consumer the channel to then leverage for research. And so they're hitting on these kind of different trends and different opportunities all at the same time while growing and performing well financially.
I was gonna ask before this episode why none of the women's health and femtech companies are going IPOs, but actually Billion to One just filed S1 just last week, so maybe it's not a good question to ask. But my question is the fact that it's so hard to make money, especially when we talk like women's health, a lot of it is prevention, and obviously in this country we're all about sick care, in my opinion. So maybe that's part of the reason, but maybe it's also a general sort of trend in digital health. Like there could be very successful stories, but at the end of the day, investors want their money back. And so I guess Flow Health recently, I guess I was reading that they're actually like breaking even and even making some profit. But in general, it's been kind of like a tough story. There could be even a success story with lots of revenues and like unicorn status, but actually making money seems to be a hard thing to do in women's health, but also in digital health in general.
And I'll just to add to that question, I love the question, Sergey. I'll just add that in women's health, 81% of deals are early stage, and seed rounds average smaller checks as general digital health. So to add to that question, why does that growth stage cliff tell us is there a problem of scaling women's health startups?
I have two thoughts and to actually both questions. I think the one on exits. So, it's been a tough time in general for VC-backed companies to IPO. The markets have been quite frozen for some time, and this year, things are kind of turning around. We're seeing some digital health IPOs, which is great. To IPO, you need to reach a certain scale, like 100, 150 million in revenue or more, and probably reaching profitability. And when I look at companies at IPO, they're quite broad ranging, and they have a very broad scope. And there have been some women's health IPOs like Progeny that did IPO. for the majority of exits that I've seen so far in women's health, they do tend to be more acquisitions. So on the life science side, for example, you have a novel device, therapeutic, diagnostic. They're often acquired at the point of receiving FDA approval. So it's less about commercial pathway, but they get scooped up by a larger strategic. And I would say also in digital health, unless you have that really, really kind of broad mandate and you reach those other metrics, then M&A is actually a great exit. And so that's, when we think about, our portfolio, where it's headed, M&A is, very likely for many of our companies. And then the other question around this pipeline state, or the stage of the pipeline, there is, there are entrepreneurs are facing all sorts of hardships and barriers, and certainly growth stage funding is a challenge, but also it is an early portfolio or pipeline. So there are a lot of companies that started out 3-4 years ago, seed stage. It does take time to grow. So it's not that all the companies are getting to Series A and then suddenly disappearing. It's that these companies are growing, and there will be a natural attrition rate that we see in all of VC, right? It's a high risk, high reward situation. There's a graduation rate for any sector, that you don't expect every company to make it from C to A and then A to B, B to C. And so I don't necessarily see those graduations rates like worse in women's health per se, but it's more that it's an early pipeline that is still growing. And so, we're seeing also just the realities of the venture world, where it's been a tough time in venture as well. So, and companies were started in 2021 that wouldn't have been in other times. And so we're seeing some impact from that, the fallout of that now as well.
Yeah, very well said. I'll summarize it as it isn't a cliff from seed Series A to growth, that you're looking at a wave, okay, that's coming through. And obviously not all will make it, but many will. The commercial traction is very good. We're looking at nearly a dozen companies in women's health right now. And realistically, all of them are investable. We may have differences in point of view of this or that. All of them have a strong path to driving returns. And that tells me actually the next 5-10 years is pretty bright for this space. And we only started looking at the ways the space can evolve. It's in maternal health, it's in endometriosis, it's in fertility. I mean, does the world realize that 75% of IVF cycles are failures, right? We send families, it's not just women's, we can categorize it as women's health, but it's families that goes through a slaughterhouse, I'm sorry to say, where 3/4 of their efforts to become a family will turn into a zero. That actually can now be changed. We have computing power. The cost of computing went down. Producing those models is extremely affordable. We have so much more data we can absorb that we can make a difference. That tells me that great investment opportunities in there.
Yeah, I fully agree with that. I think the short answer to that is it takes time, and not just because capital is cautious, right? I think it's, as Alice said, the pipeline is still quite young. I mean, if we think about the chronology, the FDA only systematically started requiring sex disaggregated data in the 90s. And so that means that the sort of the first real wave of women's health innovation, drugs, diagnostics, delivery systems, has only really been building for around about 25 years or so. That's one generation of science. But by contrast, if we look at oncology or cardiology, these fields of medicine have had about half a century of compounding research, reimbursement codes, M&A playbooks. So I think it's not surprising that women's health as an investable category still sits earlier on that maturity curve. I mean, you can't have exits before you have evidence, and women's health is still building the evidence base that the rest of medicine took 50 years or more to accumulate. So I think the companies are now doing the hard work of building categories before they build companies, getting clinical guidelines written. I take the case of Evie, who's actually building the research of the vaginal microbiome, educating payers, proving reimbursement models. That's a 10-year journey. That's not a 3-year journey. So, and Sergey, you talked about sort of the preventive medicine. I think if you layer that on top, the nature of preventive medicine, where sort of the economic benefits accrues to the system over time rather than immediately to the balance sheet. It stretches that runway a little bit more. And so I think the next 10 years is going to be really exciting because the result of what we see now, the healthy early stage funnel, strong scientific innovation, but not yet a deep bench of growth stage or pre-IPO companies. The future is bright.
You answered the question that was another question, was the success of a couple of unicorns we had. Was it like a special outlier story, or should we expect more? I guess you just answered the question. We should, because I remember when, I guess it was like Flo or maybe Maven became unicorn. It was like, oh my God, it's such a great story. Everybody was like celebrating, as they should. But I think, according to what you guys just told us, we should expect more and more success stories like this in the next few years.
No, absolutely. I think the science is catching up. The regulatory frameworks are modernizing. The capital architecture will follow. And it's kind of like watching a market in time lapse. We're only in the first third of the film. We're in the early innings.
Marianne, I love all your comparisons and quips. I love it.
Thank you. I'm very passionate about this topic. You can tell.
We can tell. And actually, we all seems to be agreeing with everything we're talking about. I just want to add a little of controversial thoughts and hear me out before you start throwing tomatoes at me. So I've been going to a bunch of Femtech events, a few in New York and Boston. I think I've been to one in Chicago. And I'm going there just to learn, find out how I can help. And by the way, if anyone listening, if you want any of my help, being a mentor or just introductions to someone I know, please reach out. But what I hear at every single event, and that's not specific to women's health, but overall, that women-led startups get only 2% of funding. And I hear the stats at every single event. And I'm like, does that statistic actually help? Should we even talk about this? Because first of all, I don't think it's objective, because my next question is how many women-led startups out there? And from the stats that I found, it's anywhere from 10 to 15%. So there are just less women-led startups. So 2% out of 10% of women-led startups is not that bad actually, but obviously it should be higher. So my question is, do you think to motivate women to start companies, to start their own startups, these statistics help or actually demotivates them? Because like, if there are only 2% of people of all the money I can get, like that's a very small percent I can be successful. So my thesis is that we actually should stop talking about this 2% of money that goes to women-led startups and actually find a way how to motivate more women to start companies overall. What do you think?
Yeah. A lot to unpack there. And I do agree with the skepticism around, does this serve us? There's a few layers. Number one, in women's health and women-led many things, there's a lot of doom and gloom. And I personally, and as a fund, there's a lot of reason to be outraged and, there's be motivated to action, but we don't want to sit in the doom and gloom only, because that is not productive, right? We can acknowledge the history and the realities, but think about opportunities and ways we'll move forward. So one is, this is a statistic that falls into the doom and gloom. That's just one layer. The second layer is, we shouldn't conflate women-led startups with women's health, because there are women innovating outside of women's health and there are men innovating in women's health. And I say this because even the best intentioned articles will sometimes conflate the two, but they're actually different things. I said, we welcome the men who are innovating, in women's health. Like it is a business opportunity. It should attract all innovators. And then the third is, you're right. There's fewer women-led startups, which is what the statistic is also trying to say. It's not just that it's disproportionate among those who exist, but that we just don't have enough in general. So perhaps we compare the two together and say, 10 to 15% of startups are women-led. That's a low number, and those 10 to 15% get 2% of funding. So there's still a disparity there. Like, then maybe it should be 10 to 15% of funding. So I do think that is trying to highlight kind of, both of those issues. Yeah, is it motivating? Is it demotivating? I think it highlights the realities. I don't know how it helps necessarily an entrepreneur, change that other than just knowing where in the statistics they sit. But yes, interesting question.
Wonderful at answering that question. Alex, you know me, I would never throw tomatoes, right? At Pace, we would only throw facts, data, and occasionally croissants, but no tomatoes. Sorry, Marianne, carry on.
I love the croissants. We should do that. We should do that. No, but Alex, it's a very interesting question, and I have a strong opinion on this one, and I think we should talk about the 2%. I absolutely think we should talk about it, but I think how we talk about it is the real question, because that number, depending on who's in the room, depending who you speak to, that number can do two very different things. I think you're right. If in founder circles, it can sound demoralizing. It can sound like the system is rigged against me. So why even try, right? But I think in and I think that in investor circles, it can also sound like accusatory, as if people are being blamed rather than being invited to change. So the way I try to use that statistic is to treat it as a market signal, not a moral judgment. So if only 2% of venture funding is going to women-led companies, I don't think that's proof that women cannot build. I think it's proof that the market hasn't learned to price what women are building. And so from my standpoint, that's an inefficiency. And so I think the story we need to tell is it unfair that women-led companies are only getting 2% of venture funding? But rather, the real question is that 2% efficient? Because markets always will correct for inefficiencies once they're visible. And so that's why I like to talk about it, so that we can make that the visibility of the inefficiency. And as investors, we want to try and get the best returns for our LPs. So let's talk about, are we actually deploying our cash dollars as efficiently as possible?
I love it. Yeah, I think that's a very important message to hear. And actually, at the very end, I'm gonna ask each one of you to come up with a message to, especially, I'm sure there are lots of founders and women-led startup founders watching us, gonna watch this episode. Some that are just having an idea, some already started working on something. Give us one last message to those founders, trying to motivate them and make sure they go through this very complicated journey, but they end up successful.
So one, I think you have 3 women here who started their own firm or participated to building their own firm, are driving strong advocacy. And while we know each other or of each other, I know that everyone came into it with passion, with mission, with a vision. And so for women out there that have an idea, that see a problem and think that they can build a differentiated solution, lean into it. And many of you are. So I don't want the 2% to sound like there are not many of us. There are many of us, and there's a growing crowd. It's more about, let's get to know each other. Let's keep the ranks tight so that we can keep marching on together.
I'm happy to go next. I think what I would say to every founder working in women's health, first of all, thank you so much for doing this. You are building in a space where the market doesn't know fully how to measure it yet. And that's not a weakness, that's actually your edge. Because every category that we now take for granted, oncology, mental health, began exactly this way. People willing to work through the noise until the data, the policy, and the capital call up. Women's health is still writing the playbook, where you're not just building a company, you're building precedent, you're building a market. And that's why your work matters, even when the funding rounds are smaller, even when the milestones are slower, even when the questions are harder. You're not behind, you're early. And when markets finally catch up, because they will move fast, because the science will be there, the demand is there, and you've already done the hardest part, believing before it was popular to do so. So keep going.
That was so inspirational. It makes me want to go start a company. I love it. Yeah, and I would say to also to thank, founders in the space and to focus on the fundamentals. It's been a weird, wild time in venture over the past 4 to 5 years. We've seen kind of a peak that, as mentioned earlier, spawned lots of innovation that would have otherwise had a hard time getting funded. Funds were started that are now having a hard time, growing. And we saw that, and then we saw a huge dip in venture. And so, however things go, remember that there is a big macro environment, factors larger than what's happening with you and your company that will impact your business and your fundraise. And so for founders to really focus on the fundamentals of building good products backed by good science and business models that are sustainable, to really focus there. And this is not a question you asked, but I'm just going to add it. Just 2 recommendations for anyone listening. We mentioned a book, or Julia mentioned a book earlier that's really fantastic. For 2 articles, if folks are looking to learn more, my 2 favorites are in 2024, McKinsey and the World Economic Forum did a big paper that's titled, the $1 trillion opportunity in women's health, something like that. That one is really great to highlight all the different, I would say, disease areas and the morbidity and where the opportunities are. And then the other favorite is SVB has released, I think in spring this year in 2025, they have an investment trends report that highlights specifically exits, investment dollars, trends that are specific to innovation. So those are the 2 recommendations that I will leave everybody with.
I love it. Even if we inspire just one person to start a company in women's health, I think that would be a huge success. So thank you so much for your time. Very inspirational, very insightful, and yeah, looking forward to meet you in person.